Hello, and hope you are staying dry on this very wet Thursday. We had Fed board governors share their thoughts on Friday, and we will give a little glimpse at the jobs week to come here next week in this week's market update. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news and data that we're watching and hopefully weed out a bit of the noise along the way. So this week is full of Fed speak, but also we're going to tie that into jobs because next week is jobs week with ADP employment and non-farm payrolls. So we're going to talk a little bit about what to kind of watch for there and how all this Fed speak kind of tees up some of the items to watch as we get into the jobs numbers next week. So we're going to go back really this week in this Thursday update is really about last week and how it ended. So last Friday, there was a ton of data that came out. Let me start maybe with the one we'll spend the least amount of time on. Last Friday, we had consumer spending come out, and that number was higher than expected at 1.8%. So, it's clear that with a higher number there, consumers are still kind of unfazed by what we're seeing as far as tightness in the economy. So this is really important. I mean, the consumer is kind of like, I don't want to say the last thing to run into challenges, but certainly one of. And the consumer has been very, very strong. And based on this number, it looks like may continue to be for a little bit. So we will continue to keep a close eye on that. But maybe the most important piece is the PCE number that came out on Friday, which is a measurement of inflation. And the core PCE number came out at 0.6%, up 0.6% for the month of January. Now, if you follow this, you probably already know, but this was higher than expected, first off, and a big jump from last month. So just as we thought, and the Fed kind of shared that inflation was under control, here we are getting January's PCE numbers. And not only is it not under control, but we actually saw a spike from last month to this month back to a much higher rate there. What I think is most important is that this actually took the year over year, not month over month, year over year PCE numbers up. So again, when we hear from the Fed a couple, month and a half ago that inflation is under control, and then we get some inflation data for the CPI number, and now the PCE number, is showing that year over year actually ticked up this last month. Obviously, that's something that is raising some concerns. Certainly something to continue to watch, and I'm sure we're all feeling this as well. It's I think for our pockets, it's not like we've seen the prices come down by any means. So that was really important to watch. I mean, keep in mind, oil is obviously a big expense or a big portion of this, and that has come down. But otherwise, we're certainly still seeing inflationary pressures for sure. And on top of this, on Friday, we had a lot going on with 5 different Fed members speaking and sharing their thoughts. And what I thought was interesting out of this is that quite a few of them were very direct in their concerns, and clearly this number shows it, around inflation and the need to really do whatever it takes to try and tame this to the best degree that they can with their tools. So we've heard some Fed members even suggest a 50 basis point hike coming up. I think it's March 20th, so it's in a couple of weeks here that we have the next Fed meeting. Whether it's 50, I think that would be quite the curveball and upset the markets quite a bit. But nonetheless, as we're hearing more and more Fed members speak, it's very clear that there is a big concern about inflation and, the desire to do whatever it takes to tame that as best they can. Because again, I think that the cat is out of the bag, and it may take a little bit of time for that to really, really work its way down. But nonetheless, that is very important. And as we get closer and closer to this Fed meeting, obviously those talks are going to ramp up again more and more. So we want to pay close attention to that. We had initial jobless claims come out today as well, and this will be a good tie into where we're going to go here next week. So we had initial jobless claims come out today at 190,000. So yet another lower number in initial jobless claims and a decrease from the expectations. The reason this is important, you guys may remember from previous conversations, we've talked about this phenomenon of like good news is bad news. Well, that's the case here, right? Initial jobless claims being down is typically a good thing. But what the market can be concerned about with this is that this may open the door for the Fed to be more aggressive, or just let's say aggressive in general. So very important to watch. And again, this is a perfect tie into next week because as we look ahead to next week, we have Jobs Week coming out. And there's really 2 days, well, 3 days to watch. Wednesday, the ADP employment report, Thursday, the initial jobless claims, and Friday, the big one, non-farm payrolls. So, keep in mind on the ADP employment report on Wednesday, take that with a bit of a grain of salt. I think it's showing, since they revamped these numbers, that it still really can't be taken too seriously quite yet. But we also have JOLTS data, coming out as well. And then, of course, Friday, non-farm payrolls. That is going to be the big one to watch. So we're going to cover everything up to the non-farm payrolls data. But obviously the payrolls data does come out Friday, so we will be covering that 2 weeks from now in our Thursday update. But nonetheless, we will have a lot of jobs data to cover next week, so definitely tune in. Our question of the week this week is a very timely one. Let's put it that way. The question of the week comes from Becky. Becky, thank you so much for sending this in. And really the question this week is all about AI, artificial intelligence for investments. And I think there's a couple ways we could go with this, right? There's the AI in terms of an investment itself, like how do we invest in the future of AI? And then there's how do we maybe use AI from an investment perspective? And I'll break that down, I think, on both sides, maybe briefly on both sides. And before I jump in, what I do want to share is that this obviously is still relatively new. So we're still learning, and I think as this evolves, there will be more and more use to be had out of these tools. This is still very early stages of this kind of advanced level of AI. And you can only imagine how that's going to continue to pick up in the years to come, right? So on one side of it, in terms of how do we use AI for investments, what I would suggest is that kind of similar to the robo-advisor kind of story, or some of these tools that come out pretty often around financial technology. Typically, what I would suggest with these tools is they are a great tool to supplement a strategy. In other words, although these AI tools could be used to look into investment strategies or to build an investment strategy, I would be very, very cautious of relying entirely on these tools for that purpose. Now, that said, they can be very helpful to maybe test an investment philosophy or strategy that you've been looking into. Maybe testing the risk in terms of how your portfolio is balanced, right? There's all kinds of things that you can use these tools for, to help give you more conviction, to help make more informed decisions maybe. But again, I would not rely on this from a 100% perspective and just kind of fly blindly. Again, I think it's a great tool. Let's use it. Let's incorporate it with all the other tools we've got out there, but certainly not the end all be all. As far as investing in AI, I think that is a very exciting topic. And obviously, this is really new. We've seen this, the last month or so. We've seen a huge explosion in this conversation and in some AI stock prices. Now, what I would suggest is, like all these things, it is very difficult to pick the winning horse this early in the race. So where I'm going with this is that we have seen a lot of big run-ups, and a lot of these run-ups may come to find that they are way overvalued at the end of the day. Maybe they can't execute on their plan, whatever the case might be. Now, it doesn't mean there's not opportunities here, because again, I do think that AI has a great place in the future and will continue to grow and evolve, just like the internet did in 2000, right? But remember, back in 2000, pets.com, for instance, I don't know where they are these days, right? So keep that in mind. Not just because a company is in the AI space doesn't mean they're all going to win, okay? And so I think it's definitely worth looking into. I think it's very difficult to pick the winners, but especially if you have a big company who is investing in this platform, could be a good way to get some exposure here, because you've got the safety of diversification within that company, but also the hopes of some AI advancements along the way too. So very broad answer. And again, it's very early stages of this. So we will keep coming back to this. Becky, definitely keep this in mind. And if you have more questions in the future, let us know. But hopefully that is a good starting point at this early stage in the conversation here. Thank you all so much for joining us. As always, if you have questions, type it in the comments or send me a message, and we'll try and cover it on our next update. We will see you next Thursday at 3 to cover all things jobs.